Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So the past week has been, the markets have been down just a hair, nothing dramatic, but it's sort of to be expected given the first several weeks of June and how well the markets have done. I'll show you a quick chart here of the last month. And as you can see, the markets have done pretty well. That's on the heels of having not done very well in May. So again, this is volatility. It's the new normal. It is what it is. Our economy's strong. So, if we want to be invested for the long haul, we have to tolerate a little bit of volatility. But what I wanted to talk about today is the concept of initial public offerings, or IPOs. I've had many people ask me, Todd, what's a good IPO to invest in? I know people that are making good money, and I want to get in on that. And my answer to most people is, it's just not something that you should do because, just for example, there have been 61 IPOs this year. 31 of them so far have a price greater than their IPO price, and 30 of them have a price lower. So you basically have a 50-50 shot of making an investment that has made money this year. And that just feels more like speculation to me than investing. So what we tell people is, look, if you really want to invest in an IPO, and an IPO is basically one way that a company can go to the public and get money in return for shares of stock. Some companies won't go public. Maybe they'll issue debt. They'll say, we want to borrow money from people, but we don't want to give them any equity in our company. But an IPO is where you issue shares of stock to the public, and the company gets money for that, and then they use that money in some form or fashion, hopefully to grow their business. So if you're going to invest in IPOs, you want to look at their balance sheets. You want to look at their plans. You want to look at what they plan on using the money for when they IPO. These are really important because, over the short term, there's no telling what a given IPO is going to do. You take a company like Beyond Meat, which is the fastest growing IPO on the planet right now. They do sort of faux meat products, hamburgers that aren't made of meat, and they're up like 500% so far since they IPO'd. So they've done really, really well. But you look at other companies that are popular like Lyft and Uber, and they're both down since they IPO'd. So you got to do some research. If you're going to do this, you got to do a lot of research. You got to understand what their business model is. You have to understand what their path to profitability is. You have to know what they're going to do with the IPO proceeds to grow their business, because the market expects that to happen. And then you have to be a little patient. So just because a company IPOs and goes down doesn't mean it was a bad call. If your math is sound and the market's not responding favorably to it, sometimes you just need to be patient and let a couple quarters of filings show up and balance sheet entries, and to see whether they're profitable or what they're doing with the money. And then if it's still a sound company, the market can respond favorably to it. So we typically only recommend IPOs for people that are really trying to play or speculate, which is not what we do here. We only invest. And so if we're going to try to invest in something, we really need to have a little longer term time horizon, to make sure that those investments have a good possibility of having a positive outcome. If anybody has any questions about any specific IPOs or their portfolios in general, give us a call, send us an email, make a reply to this video. We'll happily answer any question that you might have. But that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back next week with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.